Hi, everyone. Just to give a quick update to Elvin from a technical perspective, what we're doing right now is I'm sharing my screen for this for the welcome slide, but I'll stop screen sharing in a moment and give you the full floor. So we'll just go from you as a speaker to Manuela as a speaker, and then I'll take over again with the slide share for the first panel session. Okay.
Okay. When you want me to start? Yes.
Okay, perfect. I would say maybe in 2 or 3 minutes. Yeah. Hi, Alwyn. It seems to be that we had a little bit of a connection issue there for you. I'm not sure if that's, I think it might be on your side because I think everyone else's connection seemed to stay stable. We see you well now, though. Everything seems to be okay. So let's start in about 2 minutes, okay?
Okay, good.
All right, welcome, welcome everybody. I think it's about time that we open the session. So I'd like to give the first floor to Elwin Groeneveld, the president of the European Microfinance Network. Thank you. It seems to be that Elwin might be having connection issues, though. If you hopefully just take a few more minutes of patience while we get this sorted out. Thank you.
Yeah. So I'm okay. So good morning, everyone. Sorry about the connection issues, but here I am. Dear EMN members, EMN stakeholders, dear friends of microfinance and social finance in Europe. My name is Albert Groeneveld. I'm the president of the EMN network. And on behalf of all my EMN board members, I want to welcome you to this 17th annual conference, a very special occasion, because this is the first time in EMN history that we are unable to come together in person to celebrate one of the highlights of our activities, the annual conference. And this is, of course, due to the COVID-19 virus that has affected our whole world at the moment, with its terrible repercussions on the lives of people and organizations. Of course, this also applies to our members, whether you are a microfinance institution, government.
Well, everybody, we apologize for the technical issues that we're experiencing. As you can imagine, that's sort of an endemic risk of this age. We had Elwin back for a moment. That was a false alarm. Okay. Elwin.
Yes?
There you are.
Oh, sorry.
Perfect. Please continue.
Okay. So first of all, I sincerely hope that you are all doing well. And of course, also your colleagues and volunteer mentors in many organizations represented here today. From our end, we are happy to report that fortunately, no one of the staff of the EMN boards has gotten infected. But apart from that, we carry an enormous responsibility for all our customers, small entrepreneurs or individuals who were already vulnerable and in many cases very hard hit by the lockdown measures and consequences. Especially at a time like this, we can show our value and worth as social enterprises. Microfinance and social finance are now more important than ever. And it is wonderful to see how all you are doing your part, because I heard about many fantastic initiatives to support micro entrepreneurs. And it's great to see how many government organizations acknowledge that microfinance is an important foundation to combat the consequences of the coronavirus and to again stimulate economic development, both in the here and now and in the coming years of economic reconstruction. In that context, we are extremely pleased that the new European Commission budget for microfinance and social finance will likely increase over the coming years through ESF Plus and InvestEU. Microfinance will be needed now more than ever. And I sincerely hope that all of our members will see their added value and impact grow significantly in the coming years. I'm grateful that our fantastic EMN staff, led by Jorge Ramirez, was able to organize this special online annual conference. They have created a terrific program titled Working Together in the New Normal that will both inspire and inform us about the latest developments. A special thanks to the team as well, because late summer we were informed that MFC decided not to participate in the conference due to several internal issues. This definitely meant a lot of added pressure on our team. But as expected, they have done an excellent job. In this context, we want also to inform you that the EMN board has resumed discussions with MFC about the merger of both networks. At the moment, we are discussing some crucial topics, and we hope to give you more clarity before the end of the year. I want to stress the fact to you that personally, and together with my wonderful board members, I have invested much of my time to these negotiations over the past few years in order to reach the best outcome for all our members. The ultimate goal is to give a tremendous impulse to the microfinance sector and put us on the map as a sector that cannot be ignored. We are hopeful that all our efforts will lead to visible results in the coming months. It's now my privilege to introduce you to Mrs. Manuela Geleng, our keynote speaker for the opening of the conference. Welcome, Mrs. Geleng. Manuela Geleng works for the European Commission, where she is currently the Director of Skills of the DG for Employment, and she's responsible for implementing the skills agenda and for vocational education and training. We all know that improving and teaching skills, whether it's entrepreneurial skills or practical skills like accounting, social media, are an extremely important pillar of microfinance and social finance. That is why we are very happy that Mrs. Geleng attended and look forward to her input. I wish you all a great conference with a lot of inspiration and virtual networking. Mrs. Geleng, the floor is yours. Thank you very much.
Thank you very much, and good morning to you all. It's really a pleasure to be here at this EMN conference, and thank you for inviting me. I first would like to set out a little bit the context in which we find ourselves. And as has just been said, the last 6 months we have faced an unprecedented crisis, which had really severe effects both on society and on the economy. The impact of COVID-19 has been far-reaching, as citizens from all walks of life and small businesses were those hardest hit. And the latest Eurostat data show that 13 million people were unemployed in the EU between April and June of this year, while GDP growth fell by 14% compared to the second quarter of the preceding year. And in August of this year, the unemployment rate increased to 7.4%. So, given the current context, I would say that strong policies in the areas of employment and social inclusion will be needed more than ever before to overcome this crisis and to make sure that the recovery is fair and sustainable. The pandemic and the crisis that ensued raised an unprecedented challenge that has required unprecedented response. And let me just sketch out very quickly what the European Union has been doing over the last few months in trying to mobilize resources to support member states and to protect lives and livelihoods. So in the immediate aftermath of the outbreak, and I'm speaking of March and April, the Commission put together a comprehensive economic response. This included a €37 billion coronavirus response investment initiative, which to provide liquidity to small businesses. And it was followed by a 100 billion initiative, which is called SURE. Perhaps you have heard about this acronym, which is a support to mitigate unemployment risks in an emergency. Its purpose is basically to preserve jobs and to soften the impact of the COVID pandemic. Recently, the Council approved financial support for 16 member states under this instrument, under SURE, to finance short-term time work schemes and similar measures to help protect jobs and keep people in work. And as you certainly have heard, at European level, the Commission proposed a bold and ambitious recovery package called the Next Generation EU, and the long-term budget for the next 7 years in order to power a strong, resilient and sustainable recovery. So clearly, the proposed Recovery and Resilience Fund is the centerpiece of it all to ensure the transition from the COVID crisis in a sustainable and social recovery. So, and we look forward to a quick approval now by Member States and the European Parliament so that the facility becomes operational at the beginning of next year. The package, which is of about 670 billion in grants and loans, is aimed at supporting implementation of investment and reforms. It's there to support Member States to address pre-existing challenges identified in the context of the European semester and to achieve EU's policy objectives, especially in the green and digital transition, but mainly also to make the transition out of the COVID pandemic into a recovery, into a sustainable recovery. Member States now will have to submit national recovery and resilience plan in the coming months that should demonstrate how these investments and reforms would effectively address the challenges identified. But, and let me say but, for the recovery to work, it must be fair and it must be inclusive. one in which we leave no one behind. And I will come in a minute to speak about the European Pillar of Social Rights and about how each of us can contribute to make it a reality on the ground. So let me now focus on microfinance and how we together are contributing and can contribute to fairness and inclusion. Commission President von der Leyen pointed out in her State of the Union speech last month, SMEs, including small businesses and micro-enterprises, are the motor of our economy and will be the engine of our recovery. Today, micro-enterprises represent small enterprises represent over 90% of European businesses and are decisive for job creation, for boosting growth and investment in Europe. Microfinance is, and you know that, a very important tool to empower micro-entrepreneurs, including citizens who are further away from the labor market, to create jobs and to foster social inclusion. Lack of access to finance remains a major obstacle for micro-entrepreneurs that want to start or to scale up their business. A recent analysis done by the Frankfurt School of Finance for the Commission estimates that there is a financing gap of 12.9 billion euro a year for microfinance in the EU. The study also stresses the important role played by EU support in developing the microfinance market in Europe. As you know, the EU has been supporting microfinance for over a decade, in close cooperation with the European Investment Fund, which implements EU financial instruments on our behalf. A great deal has been achieved through the EU Programme for Employment and Social Innovation. Perhaps you know it better under the acronym, which is EaSI. The European Investment Fund has reached close to 140 agreements with financial intermediaries all across Europe under the EaSI guarantee instrument. This helps them to lend more by guaranteeing some of their loans. Every euro invested by our guarantee instrument generates 10. We expect that it will unlock more than 3 billion euro in financing for microfinance enterprises, including the most vulnerable and social enterprises. And if we look at on the job side, in total, around 200,000 jobs have been created or sustained thanks to EU support under EaSI and its predecessor program. Our support to microfinance is therefore a strategic use of public money. However, we should not just look at numbers. There are stories behind these numbers. And let me bring you two examples. A female entrepreneur with an immigrant background, started up a chocolate delicacy production in Belgium while supporting sustainable development for cacao farmers in the Philippines. Or let me speak about Robert, who set up an online business that offers a safe platform for paid video consultations that enables people to share their skills and expertise regardless of their location. This really shows that programs like EaSI make a real difference in helping build a fairer, more inclusive and resilient Europe. And as of 2021, the Future InvestEU Fund will continue our support to developing microfinance markets in Europe. In conclusion, let me say that looking ahead to the next period, we need to continue to be bold and ambitious. Our joint ambitions, together with ourselves as a network and our partners, must be to continue supporting microfinance as part of the recovery effort at the EU level and to empower citizens, create jobs and promote social inclusion. The European Pillar of Social Rights, which was proclaimed almost 3 years ago by the Commission, national governments, and the European Parliament continues to serve as our compass for promoting upward social convergence. We are also preparing as Commission an action plan to be adopted next year to make sure that its principles are delivered on. And I would like to call on you sector, that plays really an invaluable role in ensuring the principles of the pillar, and in particular the principles about equal opportunities and access to the labor market are delivered on in practice. Another action that as Commission we are preparing is an action plan for social economy to be launched in the second half of 2021. Many social enterprises in Europe start off as micro-enterprises. Therefore, you are well placed to contribute to this action plan as well. I would like to take this opportunity to remind you of your chance to contribute to the online public consultation on the Pillar Action Plan until the end of November. That is, and I would like you that could use this opportunity to signal any needs and proposals that you consider should be reflected in the Social Economy Action Plan. So I think I have given you some homework, but I also would like to wish you all a productive online conference, and I really look forward to continuing continue our work together in the coming months towards a resilient, fair, and inclusive economic and society. Thank you.
Thank you very much, Manuela. Perfect. Thank you, Elwin. Thank you, Manuela, very much for your introduction speeches. We'd also like to mention that this annual conference would not be possible without our partners and our sponsors. So today, all the sessions of today and of the whole week are organized in partnerships with the EIB group and sponsored by Galileo Network and BNP Paribas. If it is good for everyone, then perhaps we're a little bit ahead of schedule. But perhaps since everyone is here anyway, we can already head into the first session. Would everyone be comfortable with that? Okay, great. Hearing no objections, let's do that. Perfect. Thank you, Elwin. Thank you, Manuela. I'll now share the screen so that we can see the PowerPoint presentation. Okay. Can people confirm that it's presenting correctly? Okay, that's great. Thank you very much. So, so welcome everyone to the first panel session in this annual conference. Before we actually get into the substance, with the actual title, let me see if I can forward. The actual title of the session will be the EU response to the COVID-19 context and the future of the EaSI program under the multi-annual financial framework 2021-2027. Now, this is technically an EaSI Technical Assistance webinar. And that means it's organized by EMN, but with the financial support of the European Union Programme for Employment and Social Innovation, as of course introduced by Manuela Geleng as the EaSI program. My name is Oscar Verlinden, and I'm the Advocacy Manager for EMN, so I'll walk you through the session of today. And please note that the session is being recorded, and that the recording, along with any presentations and other material from the session, will be shared with the attendees after the conference. To give a little bit of context about the EaSI program before we get into it, let me introduce you a little bit to it. Combating poverty and improving working conditions in Europe. It's managed directly by the European Commission and brings together three axes: the modernization of employment and social policies on one side, the second one is job mobility, and the third one, which is relevant for us, is access to microfinance and social entrepreneurship with the microfinance and social entrepreneurship axis. That provides support to financial intermediaries that offer microloans to entrepreneurs or finance to social enterprises. There are, in general, let's say, three strands of support under this this microfinance and social entrepreneurship axis. On the left here, in the blue side of this slide, you can see the EaSI Technical Assistance one, under which this webinar is being hosted. On the right and in yellow, we can find the EaSI financial instruments, which are managed by the EIF, which include the EaSI guarantees, which are capped guarantees offered for free to MFIs with limited access to funding. Then there's also the EaSI capacity building instruments, which are investments aimed at building the institutional capacity of MFIs through equity or quasi-equity investments. And then since last year, there's also the EaSI funded instrument, which provides senior and subordinated loans to eligible financial intermediaries. Then the third component that you can see here in gray is the EaSI grants, which is comprised of things like the transaction cost support grants, which were launched. So then the EaSI Technical Assistance service providers, we'd just like to mention a few of the key stakeholders who are delivering these services. Of course, there is the consortium that is providing technical assistance, and it is the Frankfurt School, Microfinance Center, and the European Microfinance Network. And then there's also the partner that delivers all the assessment, evaluation, and ratings, which is MFR. So Microfinance, our rating agency, they provide institutional assessments, ratings, and evaluations. You can apply for this kind of technical assistance by responding to the open call for technical assistance that's published on the European Commission website. And in order to apply, you'll also need to sign up or endorse the code. The program that's underway at the moment has run from July 2018 and will run until July 2020. And if you want to know more about the financial product offered under the EaSI or about the services under the technical assistance axis, I invite you to go to the website of the EaSI program, which you can find at the end of this introduction. Now, before we get into the topic and give the floor to our experts, let me show you a few things about the WebEx tool. So there will be a question and answer session at the end of the session. So we'll let each speaker first do their presentations, and then at the end you'll have a chance to raise a question. And there are two ways that you can ask a question. First, you can use the hand icon, which you can see. It's just on the right-hand side. There's a small icon next to the little megaphone icon. And that lets us know that you want to ask a question, and we can then at the end give you the floor. Alternatively, you can ask your questions in the chat at the bottom right, or in the Q&A box in the bottom right, actually, where we can collect all the questions, and at the end we can either relay those questions ourselves to the speakers or still give you the floor. Great. So now, having given that introduction, let's head back into our topic and introduce the speakers for today. So today we will have four excellent speakers giving an overview of the perspective on how the EaSI program has been performing and how it will perform in the future as well. All, of course, in the context of the coronavirus pandemic. So we will have a perspective from the European Commission first by Shadin Virata, who is team leader for DG Employment and Social Affairs. Then we'll have from the European Investment Fund, Pereira Eriksson, who is the head of inclusive finance. Then from Microstart, who is a microfinance institution here in Belgium, we will have Lens Lapau, who is director of operations. And then we will also have Impulse, the investment management firm. We will have Nicolas Blando, who is a manager there. And as mentioned before, my name is Oscar Verlinden, and I am advocacy manager for the EMN, and I will be the moderator for today. So having said all of that, I would like to first invite now the first speaker, and that would be Shadin. Shadin, you have the floor. Please go ahead.
Thank you, Oscar. Good morning, everyone. Can you hear me well? Great. Okay. So first of all, thank you very much for the invitation to take part and be part of this panel. Very happy to be here, and I'm also very happy to be here among very esteemed guests as well. Now, my director, Ms. Manuela Guillain, gave you an introduction in terms of overview of what's been happening on the policy scene. what I will do here is give you really an insight into the types of instruments that we've put forward and have implemented together with the European Investment Fund over the past years. I'll also speak a bit about what we've been doing concretely in terms of the EU response to COVID-19, also in particular to support the microfinance sector. And finally, the idea is to also give you a flavor about what's to come for the next years ahead, because as you know, well, this year, 2020, is the final year of actually the current programming period, which started in 2014 and ends this year in 2020. And now we're going to be able to look ahead to the next years, so the next 7 years as of 2021 until 2027. So, Oscar, if you could move to the next slide, please. Great. So if we take a trip down memory lane and we look back over the last bit of what has happened, actually, it's actually quite impressive to see that a great deal has been achieved. And in terms of concretely, EU support for the finance sector has greatly broadened. If we look at, for example, in 2010, so the predecessor of the EU Program for Employment and Social Innovation, so the predecessor was called Progress Microfinance. That was launched back in 2010 and ended in 2016. And if you look now in 2020, basically further down the line, you can see that in the meantime, a lot has happened. The idea is not to go into detail, but just to give you a bit of a flavor of what we have achieved so far in terms of EU support for the sector. Well, in 2011, the Code of Good Conduct for Microfinance, which I believe many of you are familiar with, which sets really a quality label in terms of best practices and standards for microfinance institutions in Europe. So that was launched then. And then in 2014, the EaSI program started. So that's the Employment and Social Innovation Program, which, as Oscar presented earlier, includes a specific axis focused on microfinance and social entrepreneurship. And shortly after that, actually, the first financial instrument as such, EaSI Guarantee, as we call it, was launched. That was followed in 2016 by an EaSI capacity building investment window, which is basically equity investments or quasi-equity investments. In other words, can be subordinated loans to support microfinance institutions to build up institutional capacity. And that can be through, for example, investing in their IT infrastructure, trainings, supporting, for example, opening new branches in other regions. And if we look a bit later, actually in 2017, 2018, there was a significant boost that was provided by the European Fund for Strategic Investments, which was at the heart of the Juncker plan for investment in Europe. And that basically topped up, so it gave an additional boost of 300 million euros to the EaSI Guarantee instrument, which has been very successful. And then if we go a bit further, actually looking beyond financial instruments, we also had a new, let's say, form of the EaSI Technical Assistance, as we call it, but it's essentially advisory support for microfinance institutions that was started entered into a new phase in 2018. And at the top of that, we actually launched a pilot, which is called a pilot grant for business development support services, which is basically coachings, trainings, for example, and counseling to help microfinance institutions in financing these types of services, particularly for migrants and refugees. And then coming closer now, basically last year, we actually launched what we call the EaSI funded instrument, which is basically a debt fund to help provide liquidity to microfinance institutions. And then more recently, this year, actually just before the summer break, and there per Eric, my colleague from the European Investment Fund will say a bit more, we introduced a host of COVID-19 support measures in order to boost additional support in terms for microfinance institutions. So this basically gives you a bit of overview of the timeline of what has happened over the past year. So it's what is quite impressive. And basically that leads, if you take all of this together, if we move to the next slide, here it provides actually a comprehensive toolbox, as we like to call it, of different instruments to support the ecosystem specifically for microfinance and social enterprises. Now, if we break down the slide that you see here, there are essentially three key building blocks to the EU support for microfinance. One is financial instruments, as I mentioned a bit earlier. So that basically involves repairable finance. This can take the form of guarantees, such as the EaSI Guarantee Instrument, which was basically launched to provide greater credit risk protection, let's say, to microfinance institutions, also to banks, to help them take on more risk and therefore to on-lend more to micro borrowers and micro entrepreneurs. We also have the EaSI Capacity Building Instrument, which I mentioned. So this is basically equity and quasi-equity for microfinance institutions to invest into their own institutions to basically help them scale up. And we also have, as I said last year, the EaSI Funded Instrument. So that's the third row there, basically, which is a debt fund, so a loan fund, to provide additional liquidity to microfinance institutions in order to help them on-lend more. And so if you take those three together, basically it covers the debt, the equity, and the guarantee. So really the whole plethora of financial instruments that have been provided through the EU. And actually, if you take all of this together, well, how it's being implemented, so we work with our partners, the European Investment Fund, that basically implements them on our behalf. And they actually bring this to the market, and they are the ones who signed the agreements with the microfinance institutions. And so that's the part financial intermediaries, as you can see on the slide. And there, in turn, it allows microfinance institutions, but also not just microfinance institutions, but also banks, for example, to basically provide microloans, so up to 25,000 euros. And in certain cases as well, to support social enterprises up to 500,000 euros. So that's the first building block. The second building block, actually, that complements the financial instruments are the grants. Because in essence, repayable finance cannot necessarily be appropriate in all cases. And a lot of times, grants are also needed to start projects. And there we have a whole host of different types of grants that have been implemented and provided directly by the European Commission. One interesting thing to note is that you can see on the right-hand side are these operating grants for networks. Well, that includes, for example, grants provided to the European Microfinance Network, but also to its partner, the Microfinance Center. And we have also a whole host of other networks at European level that we support through these grants. And then last but not least, the third building block, which you see at the bottom, is the advisory part. So one thing is providing money, but in itself, it is not sufficient. So we complement that with advisory support for microfinance institutions, but also for social enterprise lenders. And that is done through what we call the EaSI Technical Assistance program, which is basically hosting us as part of this panel. So that basically provides you the whole ecosystem approach. Now, if we take a specific look at one of the first financial instruments that we basically set up and is being deployed through the European Investment Fund, the EaSI Guarantee, as Ms. Manuela Guillen mentioned earlier, well, up to now, actually, we have close to 140 operations that have been signed actually in 31 different countries. And all in all, this together is expected to mobilize up to 3.3 billion euros in financing. So it is quite impressive. So in essence, how it works is that for every euro that we put in terms of EU budget, it actually helps to generate almost 11 euros per euro that the EU supports. So in terms of every euro that EU puts into this program, so the EaSI Guarantee, actually it helps to generate 11 euros in terms of financing, in terms of the loans that are provided to micro entrepreneurs, but also to social enterprise. So there we clearly see that actually our target was initially 5.5. So for every 1 euro we put in, we were hoping for 5.5 euros to come out. And actually we see that we've more than doubled pretty much that objective. And in terms of the financing that we were looking for initially, well, we were hoping for a minimum of 500 million. Well, actually now we can see that actually it's gone much more than that. So if everything goes to plan, well, more than over 3 billion will be provided to microfinance, but also to social enterprises. And there, Per-Erik will give you a bit more insights into what is the state of play concretely there. If we move to the next slide. Thank you, Oscar. Well, actually, in the meantime, so all these instruments have been put in place, but as you well know, well, ever since this year in March, I mean, the situation and the dynamic has considerably deteriorated with the advent of the COVID-19, so the coronavirus pandemic. And in response to that, actually, because we together with the European Investment Fund, we really looked at how we can support the microfinance sector even more, considering the enormous strain that has put microfinance institutions, but also micro borrowers during these difficult times. And so what we've done is actually, right before the summer break, we've introduced a series of measures to basically enhance further the flexibility of the EaSI guarantee instrument in order to allow for greater risk sharing. In other words, for a bigger part of the EU support to hopefully cover more in terms of the risk for microfinance institutions, and therefore to allow them to continue lending. And I will not go into detail here, but in essence, as you can see, we've increased, for example, the guarantee rate from a maximum of 80% to 90%. We've also extended the guarantee coverage by 12 months. So at the moment, the guarantee that is given by the European Investment Fund with EU support, EU money, basically that provides a guarantee over a period of 10 years. Well, we've extended that by an additional year in order to take into account of the exceptional circumstances that we are going through at the moment with COVID-19. But anyways, I won't go into any more detail here. Parag will be able to provide more insights. Now, if we go on to the next slide, so if we look at the bigger picture, so what I explained until now was basically the support that the EU is providing, also through the European Investment Fund, specifically for microfinance. But if we look at the bigger picture, actually, and as Ms. Manuela Geleng explained earlier, we are seeing very severe, very profound, and very visible socio-economic impacts in the EU. Here, there are two graphs that try to depict this, and these both come from Eurostat and was published quite recently. So as you can see on the left-hand side, well, basically, I mean, I think it's not a surprise to many of us. Well, in terms of the economic output, so basically the gross domestic product, GDP, in EU 27, if we look at the growth rates, this has significantly reduced. So you can see by Q2, so Q2 is by the end of June of this year, we already have a significant drop of minus 14% compared to the previous year. So that's compared to Q2 of 2019. But that only tells you one part of the picture. Then you see on the right-hand side, there has been, unfortunately, I mean, an increase, quite a big jump in unemployment. Looking at EU 27, well, basically we were at a level of roughly 6.5% of unemployment, and that has jumped by almost one percentage point, so to 7.4% as of August. And then, of course, we'll continue to follow this closely. Having said this, I mean, and I'll explain some of the measures that were taken at the EU level. Well, it could have been, with all the measures that were taking place, it did help to cushion the blow. So here, really, you see the numbers. If we move on to the next slide, if you look at really what this means, well, in essence, it is an unprecedented crisis, which has called for, from the EU and its member states, an unprecedented response. If you look at here, this it sort of gives you an overview of all the different types of measures that were taking place. So bringing all these comprehensive package of measures all together, around 4.2 trillion euros has been provided to and mobilized to support the economy and support its citizens. I will not go into detail into each one, but if you take, for example, on the left-hand side, in terms of national measures taken by increasing flexibility in the euros, this is allowed to unlock around 775 billion euros. Ms. Manuela Geleng mentioned earlier this SURE instrument, which is basically short-term work schemes to help support and keeping people employed. So basically in terms of, for example, temporary unemployment support. And we have other measures, notably, for example, through our partners, the European Investment Bank, which also as a group includes the European Investment Fund. They've also been mobilizing 200 billion euros in terms of really financing for small businesses, and that includes also for micro enterprises. If we move on to the next slide. So that was basically the immediate measures that were taken to help cushion the blow economically and socially of the COVID-19 pandemic. And then recently, until just before the summer break, so at the end of May, the Commission actually put forward its proposal for the next EU budget for the next years. So as I said, the next period will start in 2021 as of next year and run until 2027. And a whole host of basically proposals were put forward in order to, on the one hand, reinforce the long-term budget of the EU and for an amount of 1.1 trillion euros. And that is actually then reinforced by a sort of temporary reinforcement mechanism that we call Next Generation EU, which is basically a recovery instrument, in order to further boost support through 750 billion euros. So if all in all, if you look at that package of measures, so the long-term budget of the EU for the next 7 years, plus this temporary instrument, Next Generation EU, that will be implemented over the next 4 years until 2024. That's the Commission's proposal, at least. That leads to a total amount of 1.85 trillion euros. Of course, this is the Commission's proposal. You may be well aware that as well the European Council reached an agreement in July, and now negotiations are ongoing with the Parliament, the European Parliament, in order to hopefully by the end of this year reach an agreement so that we can start the program for the next years in earnest. One key aspect that also my director, Ms. Manuel mentioned, is as part of this Next Generation EU, which is this recovery instrument, it actually essentially has 3 pillars to it, which are the 3 boxes you see at the bottom of the slide. So on the one hand, the idea is to help and support member states to recover, repair, and emerge stronger from the crisis. And that actually includes this recovery and resilience facility, the RRF, which will be a huge support for member states in that respect. Secondly, we also have measures that were put forward in order to kickstart the economy and mobilize private investment. And that's where InvestEU comes in. And I'll say a few more words later on. And then finally, also drawing lessons from the crisis in terms also the need for European strategic investments and also all the different types of support measures that we realized that need to be implemented following COVID-19. These are also being taken into account. And so all in all, if we put all these 3 pillars together, the idea is basically to help invest in a greener, in a more digital and a resilient Europe, and to help power the recovery. If we move on to the next slide. So as part of kickstarting the economy and basically supporting investment, for the next period in 2020, 21, 2027, the Commission has put forward a proposal for InvestEU. So InvestEU will be the idea is for it to be the successor of all the different EU financial instruments that have been implemented so far. And that includes, for example, EaSI. So the instruments that I explained earlier, the EaSI guarantee, for example, the capacity building investments window, the EaSI fund instrument. The idea is to allow for continuation of them, but as its successors basically in the next period under InvestEU. Now, how InvestEU is set up. So the Commission has put forward a proposal where you would have different windows. So you would have a window, for example, to support SMEs. You would have a window to support sustainable infrastructure, a window to support research, innovation, and digitalization. And there's also a window specifically dedicated for social investments and skills. And that's where the support for microfinance will continue. Here, I will not go into too much detail, but this slide gives you a bit of indication of what it's about, how it works. So basically, the idea is it will be a single program for all financial instruments across the windows that I mentioned. And then there will be single guarantee agreements that will then be signed with each of the implementing partners that will be implementing this. So in particular with our privileged partner, which is the European Investment Bank Group, which includes the European Investment Fund. And all of this together basically will allow, and that's what we're aiming for, to continue supporting, but also to be even more ambitious and provide additional support to microfinance going forward. So I will stop here because I believe I've reached the end of my time. I'm happy to take, of course, any questions, and I hope this helped you to get a bit more glimpse into what has been happening over the last years, but also what we aim to achieve going forward and how we will do that. And one final thing, and I forgot to mention, of course, InvestEU is only one part of the equation. So that covers the financial instruments. So if we go back, Oscar, to maybe a previous slide, if we can, which gives you the three building blocks, basically. Yes, one more back. Yes, this one. So basically, the idea is that this first building block of financial instruments, that will be continued under the successor of which will be InvestEU going forward into the next period. And then actually the other measures that you see below, so the grants and potentially also the advisory support, the idea is that will be supported through the future European Social Fund Plus, so the ESF Plus as we call it. So in essence, on the one hand, you have financial instruments under InvestEU, and on the other hand, all the other supporting measures, the idea is to continue them under ESF Plus. And that, of course, the program now, these programs are now being negotiated and are being discussed between the co-legislators, the European Parliament and Council. So at the moment, it's too early to say what will be the final picture, but hopefully we'll be able to know that very soon. And once we do, of course, we will we'll communicate around this. So thank you, Oscar, and thank you, everyone.
Thank you very much, Shadeen, for this this good insight, a very good overview, and thank you for all the work that, of course, you and everyone at DG Employment has been doing to set all these, to contribute to the setup of all these measures. It's very much appreciated. So now perhaps we can move on to the next speaker. Just to remind everyone, the questions, we're going to reserve time for questions at the end. So in case you have any questions, feel free to either already write them in the Q&A section of the interface, or just or save your energy for the end when you can raise your hand and then we can unmute you. Okay, thank you very much. And I'm going to pass the word now to Per-Erik from the Investment Fund. Per-Erik, the floor is yours.
Good morning from Luxembourg. Can you hear me well?
Very well, thank you.
Very good. Thank you for this opportunity to present EaSI achievements to date, and I'll also say a few words about the European Guarantee Fund, or EGF in short, that the EIB group launched last month. I'll start by saying a few words about the current status of the implementation of the various financial instruments. And as you already saw from Shadeen's presentation, we have three main instruments that provide guarantees, capacity building, mainly through quasi-equity, as well as lending through senior and subordinated loans using a Luxembourg-based fund structure. In this first slide, we can see that the various instruments were launched, including the BDS pilot, at different points in time, from as early as mid-2015 for the guarantees until as recently as end 2019, and here I'm referring to the funded instrument that we launched only last year. The guarantee and the embedded BDS pilot, they are now at the very end of the implementation period. And I think we can be quite happy with the results achieved so far, both in terms of the committed volumes and also just looking at the sheer number of transactions signed. I believe it also shows the importance of the EFSI top-ups for these guarantees, because as you might remember, the original guarantee budget was rather limited, but since it was boosted, I think by 300% compared to the original EaSI guarantee budget, that has helped us quite a lot. And this should also be compared to the guarantee budget that was available in the predecessor program, EPMF, which was only 25 million euros. So looking back and considering this, I think it's fair to say that there's been really a phenomenal growth of the EU guarantee activity targeting inclusive finance, looking back over the last 10 years. I think it also demonstrates that the kept guarantee product, which is like the flagship product, it works really well, and it is in high and increasing demand. At the EF, in the way we implement this guarantee, it also comes in different forms to fit almost any type of financial intermediary. We have direct guarantees and counter guarantees, as you know. We have also some more bespoke structures like umbrella guarantee structures, risk-sharing structures, and lately we have also started using participating entity structures to even fit very small lenders, such as credit unions and the like. Including the remaining pipeline of 17 transactions, we can see on the right-hand side the pipeline volume and numbers. We have actually committed 99.8% of the available EaSI guarantee budget. So in principle, there's nothing left. Then turning to the EaSI capacity building instrument, I think also here we can say that it's developed really well, although after a rather slow start, including the pipeline of five transactions, which I've listed on the right-hand side. We have committed almost 93% of the available budget also for this instrument. And also the range of financial intermediaries supported is wide. We have been working with non-bank microfinance institutions, fintechs, ethical banks, etc. As you probably know, we have also, with the capacity building instrument, supported the Helenos Fund through a junior equity contribution. Finally, when it comes to the EaSI funded instrument, the time elapsed is only 26%. And even including our pipelines, we have signed 2 transactions earlier this year, and we have a pipeline of 10 transactions. There's actually still some 75% of the funds to be committed. So this is clearly where we will devote most of our time and efforts going forward when it comes to the EaSI financial instruments. I think we can turn to the next slide. In July, as mentioned also by Shadin, we launched the so-called EaSI COVID-19 measures, where we are enhancing the risk coverage of the EaSI guarantee, providing temporarily 90% guarantee rate, extending the guarantee term coverage, etc. This slide is there to illustrate that many guarantee agreements will benefit from the COVID measures, both existing ones at the time of the launch in July, and the new ones that we will enter into before we have fully utilized the EaSI guarantee budget. As you can see, also many of the amendments are using a streamlined process, what we call the MES amendment process. But they have also committed to making sure that amendments are implemented even for more bespoke transaction structures, for nobody to be left out and for everyone ultimately to benefit from these measures. As you probably know, also these measures were implemented in a budget neutral way, so there were no additional budget used for it. But I believe the measures overall are still very beneficial for all the EaSI cooperation partners, especially in these challenging and highly uncertain times. We can move forward. Then the next 2 slides will illustrate some of the results achieved on the EaSI guarantees so far. So we can see that we have large amounts of funding mobilized, both for microfinance and for the social entrepreneurship strands. In the beginning, a lot of focus was on microfinance, since that's what's, let's say, a theme that we had already covered in the predecessor program. But the activity, also in terms of guarantees to social lenders, is clearly picking up. We can see that we have really many financial intermediaries as cooperation partners, both banks and non-banks. And as you know, many of these are also either EN or MFC members. We can see many countries covered, 31 in total. Although it seems that EF has a certain weakness when it comes to reaching out to islands, because we have covered all countries except Cyprus, Iceland, and Malta as of current date. Next slide. Many of the companies supported through the activity are startups, more so for microfinance than for social entrepreneurship. There's also quite big differences between banks and non-banks in this respect. For example, when it comes to startups for microfinance, I think even though the average is 51%, we are in the high 50s for non-banks and low 40s for banks. Whereas for social entrepreneurship, even though the average is 31% startups, at least based upon the data that we have available from our regular reporting, banks actually tend to lend to a larger extent to social enterprises, which are startups, than the non-banks. Then also in terms of sector and industry distributions, there's a lot of focus on retail trade and small-scale farming on the microfinance side, and representing roughly 40% of the overall portfolio. And for the microfinance, for the social entrepreneurship strand, there's a high percentage of work integration social enterprises which have been supported so far. Finally, I'll say a few words about EGF, or the European Guarantee Fund. So this is a crisis instrument announced and launched by EIB Group in September, so last month. And it is backed by participating member state contributions. So it's not an EU instrument, it's an instrument that relies on backing from member states themselves. I believe that at least 21 out of a possible 27 will take part. Some countries have already said no. I think it's the case for Romania, Czech Republic, Estonia, and Latvia. But even with those 21 taking part, since actually the budget committed is mainly the budget committee coming from the bigger member states, there's likely to be a budget of 25 billion there to back increased risk-taking in the participating member states. So that's important to keep in mind. Even though there's a global pot of 25 billion, it can only be implemented in those countries which actually opted in to take part in the initiative. A special feature of this instrument, and one should also consider that it is a crisis instrument, is that it has a short implementation period, especially if you compare it to typical EU instruments, which have a long implementation period. So it runs until the end of 2021 under a specific EGF state aid temporary framework. I understand that there is some chance that this framework can be potentially extended, or it could be that EGF could continue for a while back or on a framework like de minimis, but that is still to be confirmed. Talking about EIF in this initiative, since I said it is an EIB group initiative, and talking mainly about the thing that is, I think, relevant for this forum, about guarantees. EIF is going to provide capped and uncapped guarantees implemented using a standard 70% guarantee rate and building largely on the COSME and INNOFIN track record that we have. But having said that, I think we can conclude that EGF can also be used by EaSI intermediaries, but there is no specific inclusive finance theme defined. There's only a broad support to SMEs and small mid-caps in general that apply in terms of eligibility. As a matter of fact, we are working on a number of larger transactions with existing EaSI intermediaries using EGF or going to use EGF. And here we're talking about the EaSI intermediaries that have either fully utilized or are about to fully utilize the allocated budget under EaSI. That was all from my side. Thank you very much. I'm also ready to provide more details and answer questions later in the session.
Great, thank you very much, Betty, and thank you also for all the great work that you're doing in response to these very special circumstances. So the next speaker will be from the perspective of a microfinance institution here from Belgium, Lens Lapau, Director of Operations for Microstat. Lens, you have the floor.
Thanks a lot, Oscar. Thanks a lot, everyone, and hopefully everyone is safe and well. Very happy to see you all again in the virtual world, of course. I'm very happy to testify about Microstart's view on EaSI financial instruments. You can go to the next slide, Oscar. Thank you. So Microstart already benefited from different financial instruments. Actually, they're very crucial for Microstart, for its existence and for its continuation of its activity. So Microstart has already benefited from the tailored training. So I will tell you a bit more regarding that on the next slide. Of course, we are under the Code of Good Conduct. And we had this year our first microfinance financial rating, which is really interesting for Microstart itself, and also to find other investors or funders, or also to improve our own operations and our internal governance. Microstat has also benefited from several peer-to-peer visits. We received several peer-to-peer visits, and we did some as well. And in the near future, we will probably going to continue this, since we are turning very fast digital, and we can still learn a lot from our other colleagues in the microfinance sector. You can go to the next slide. So especially this year, we were able to benefit from the tailored trainings provided by the European Commission and the Frankfurter Schule. They were really interesting, and they came on a very good timing from MicroStart, because we started in 2011, and since that date, of course, we evolved. We were able to help more beneficiaries or people who need access to finance. But of course, we also need to adapt our procedures, or governance, or institution, and so on. So we had quite a lot of internal changes, and thanks to one of the tailored trainings from the European Commission, we were able to have a better view on these and adapt ourselves better to face those challenges we had currently. As well, of course, with the current pandemic situation, the tailored training was really welcome in this new digital world. So this really helps MicroStart for its own development and for its own continuation, and also, of course, to enhance access to finance. Next slide, please. So, and of course, we also benefit from the guarantee instrument. We benefit from it since the start of our operations in 2011. So first, of course, the EaSI guarantee progress from 2011 to 2015. Afterwards, or now currently, the EaSI guarantee from 15 to 21, and the EaSI COVID extended support measures. You can go to the next slide, Oscar. So the guarantee for MicroStart, actually, it's really a crucial mechanism, especially because actually MicroStart doesn't have any other guarantees on this moment, no national or local guarantees, or no other type of guarantees. So without this guarantee from EaSI, MicroStart could not operate, actually. We could not get any credit lines from our financial partners and so on. So this risk-sharing mechanism is really of crucial importance to MicroStart, and so as well to its beneficiaries, the small micro-entrepreneurs who we can give access to finance. So again, it's a crucial vehicle, a crucial mechanism to MicroStart to operate and to give people access to finance in Belgium, and support them with developing or starting their businesses. Next slide, please, Oscar. So with the COVID-19, we were very happy to see that the EaSI was very responsive to that, and came up really fast with its own COVID measurements to support microfinance institutions and social financial institutions, of course. It was especially necessary with the public. We are working with the small micro-entrepreneurs who don't have a lot of coverage or reserves to cope with crises or with decreased revenues. So it was as well some crucial measures where we could benefit from. On the one side, the guarantee rate has increased from MicroStart from 75 to 90%, with a reduction of risk retention from 20 to 10%. Of course, as well, a cap rate that went up, increased from 20 to 25%. And a simplified process to get access to these measures and support mechanisms from the EU. So again, this is a crucial signal and also message and support from EaSI to the MFIs during this crisis. They were able to offer us more flexibility and to give us more resilience. And we also have more confidence to look towards the future, to look towards this crisis and to overcome this crisis in a good way, as well as we don't know really how long this crisis will last. This is also crucial for MicroStart and I think several microfinance institutions. Next slide, please. We do have also some recommendations, so we don't want to say that there are, well, we want to give some constructive recommendations because we're very happy with the support that has been offered and been provided. But one of the recommendations from MicroStart's side actually is that, so there is an increase in the guarantee rate, but unfortunately till now there was not an increase in the guarantee budget from microfinance institutions. So they extended the coverage period, which is really positive and very important, from the 1st of April 2020 to the 31st of December of 21. But actually, this means that if the budget does not rise as well, that possibly MicroStart will consume its guarantee rate faster by 31st of March in our simulations, and we will not be able to cover the losses after this date with the current budget in the EaSI guarantee for microfinance institutions. Well, we also know that there are negotiations ongoing, so we hope this will still be able to change because there are very good measurements, but of course the budget should raise as well. For example, like COSME, where there was a raise in the budget for the guarantee. But in general, again, we are very happy with all the positive COVID measures that have been offered and applied by EaSI. The next slide, please, Oscar. We also have one other recommendation, which is more a general recommendation, but for a microfinance institution like MicroStart, it would be very interesting to have the possibility to buy back, for the micro entrepreneur, of course, to buy back a microcredit loan, which is covered by the guarantee fund. Currently, these redemption credits, or the possibility to buy back a credit, are not covered by the guarantee. And from our operational point of view, this is sometimes a pity because our micro entrepreneurs, they don't have a lot of means, or not exaggerating a lot of means. They maybe have a bit less capacity to pay back loans than the people who have access to the banks and so on. But this means that during this difficult period or times, a lot of people are knocking on the doors of MicroStart to get an extra cash flow credit, to get an extra credit to cover the crisis, to make some to do some more e-commerce, to have a web shop, to do takeaway, and so on. But unfortunately, this is not always easy to grant these persons these credits if we cannot buy back or take over the loan with a new microcredit. So the monthly installments remains quite low or stable for the micro entrepreneurs, and especially in these times. Of course, we can find solutions to do restructurations and give an additional loan, but this is not always in the best interest of the beneficiary. So we try to find some solutions, and we know that as well the EaSI group is looking into this for the future guarantee funds. So we're really happy that they take this into consideration. Okay, Oscar. I think, yeah. So
Nice.
this were more or less from our point of view. So again, we're very happy with the support. Without MicroStart, could not help micro entrepreneurs in Belgium or support micro entrepreneurs. So big thank you.
Great, thanks, Lance. That's very helpful. Thanks for sharing your experience and also for sharing these very concrete recommendations and constructive feedbacks. For the last presentation of this panel, we will pass on the word to Nicolas from Impulse. Nicolas, you have the floor.
Thank you, Oscar. Maybe first, are you hearing me well? Okay, perfect. Thank you. Thank you. Good morning, everyone. It's a real pleasure to be here. And thank you to EMN for organizing this online conference. So I'll give here the view of a practitioner, investment manager. So we are managing among other elements, which, as Perik mentioned, benefits from the EaSI capacity building investment. So I'll structure the presentation in three main elements. So the first one is the context we've seen at the beginning. The second one is the reaction we have done afterwards. And then about the market and the evolution, what we have seen over the last month, and what we see now, and what is upcoming. So maybe for the context, so first the crisis. So as already been said, the first effect is liquidity. Some institutions were in need of liquidity right in March when the lockdown started across Europe. And this some institution didn't face this needs because of prudent management, because of a little bit of luck, some different reasons. but some did need some liquidity, clearly, and as most of you probably know, the liquidity for financial institution, financial intermediary is really key, in particular in crisis periods. So that was the first effect that we've seen. Then the second one is the portfolio at risk increase that we saw and that we are still seeing now. So as you know, it increases quite rapidly, but it takes some time to decrease. So given the moratorium and the restructuring of loans that have been launched in most of European countries, we have not yet seen all the effects of that, because some moratorium are still ongoing until year end, and so it's only next year that actually we'll have the complete figures of the impacts. Of course, taking into account that no other lockdown or similar measures are being put in place. And then the first one is the third effect is after the increase of portfolio at risk, the consequent increase of provisions, and then we see the impact on the solvability of the institution. And this, we start to see this since a couple of months, and probably for the next year, and I'm sure after as well. So solvability used to be very important, and will be even more important in the future to support the small and larger financial intermediaries, to allow them to support with adapted measures micro and social enterprises. Maybe the next slide, please, Oscar. So then at Impulse and at LNS level, what we have done, so nothing really spectacular, but basically three main things. So first, a closer monitoring, regular calls with all our partners and clients across Europe, a request of monthly key performance indicators that we provided to first at our level to analyze it, to understand it, and then to provide it to the investors and committee members, because of course everybody was asking questions and we're wondering how it was going on the fields. Then the second very practical reaction was an improved collaboration among lenders, among investors. So in some cases, inter-creditor agreements were needed. We have participated as well to understand better what was happening to surveys on the impacts of the crisis on the clients and then the micro entrepreneurs and social enterprises, together with an NGO in Luxembourg, with ADA, and with Fondation Grameen Crédit Agricole. And we signed as well a common pledge among investors, named the key principles to protect MFIs and the clients. And at the Belgian level, we co-signed a call of action of the Belgian impact investor. And then last but not least, we did continue to invest. We didn't stop our activity. We did maybe make additional analysis, but we have maintained disbursements. And maybe know what we see right now is that for new clients, so for institutions that that are not in our portfolio for the moment, traveling remains challenging, let's say, or difficult. And so this is precisely what is our current challenge. So we basically do a case by case, depending on the country, depending on the sanitary situation of the country, we do travel or not. At the moment, we still prefer to make physical due diligence prior to invest, but of course we don't know how this will evolve in the coming month. Maybe the last slide, please, Oscar, for the market evolution. So, as has been mentioned by Ms. Gelling at the beginning, so just a key but important reminder is that micro enterprises represent 1/3 of employment at the EU level, and as well, so more than 90% of enterprises in terms of number. So it's really key. All the toolbox that has been presented by Shadin before it is targeted for all, so for a key sector, if this has still to be mentioned, but let me please mention it. Then the second element is the funding gap, as well as being reminded by Ms. Gelling at the beginning. This recent study shows that there is a yearly funding gap for microfinance of almost 13 billion euros, so a huge amount. What we see as well is that the demand from the market is both sides. So the guarantee mechanism put in place for larger institutions, for some smaller as well, but mostly for larger institutions, are definitely needed. But the mechanism needs as well to be adapted to smaller institutions, to their specificities. Of course, so it's small by definition. Probably the higher perceived risk, not necessarily risk, but it's perceived higher. And the human capacity, so smaller institutions means limited staff, and so limited capacity to access a challenging mechanism directly from the European Commission. And then what we see at the end as well is that since the summer, or a little bit beginning of the summer, we see that the demand with quality has been increasing. And it comes from all of Europe, so from north and south and west and east, and from both microfinance and social enterprises. And I insist that the demand is of quality. It's not because of a price increase that has been mentioned before, or because of a crisis. It's really institutions or financial intermediaries that are performing well, and that on their side demand is increasing as well, and so they do need to strengthen their solvability to be able to face this demand. And so, of course, at our level, LNS is a small but we believe needed tool to support those financial intermediaries. And so yes, so that's what I wanted to share with you this morning, and I'm as well, of course, ready to answer any questions. Thank you.
Thank you very much, Nicolas. That's a very good perspective as well. So thank you again to all the speakers now for the presentations, and the next step would be to go to questions and answers. But before doing that, I'd like to bounce the ball back to the other panelists. Is there anyone who would like to react to anything that was said by the other panelists before we give the floor to the audience? I don't know, is there anything in the perspectives, for instance, of Lens and Nicolas that Shadine or Per-Erik would like to respond to? Or shall we just move on to the audience questions and answers?
Oscar, perhaps I can respond if I can take the floor, if that's okay.
Absolutely, please do.
Okay, so I mean, and thank you very much to my co-panelists for also the very interesting presentations that they provide. Also, always for us very insightful also to get not only, of course, so we work very closely with Per-Erik and his team on a daily basis, but also to get, of course, the very useful insights from Impulse, but also from MicroStart, because I mean they're the ones who are really active on the ground, and also institutions. I mean, our institutions that we're supporting under the EaSI program. If I may, then so Lens he did touch upon a few recommendations. So I've certainly taken note of those, and also for us they're not new, and these are also the issues that we have discussed at length and very closely with Per-Erik and his team. If I may, on the first recommendation, which was indeed to increase the EaSI guarantee budget, and I also saw in the chat there was also a question about that. Perhaps just for everyone to be aware, this is definitely something that we've looked into a lot. We've really tried to leave every stone unturned. But the fact of the matter is, at the end of the day, we do have a limited budget at EU level. It's not unfortunately unlimited. There are competing priorities, but for us, support to microfinance sort of remains a key priority. So please rest assured of that. One of the reasons why actually the EaSI guarantee budget was not increased is also partly to do with the fact that there were a whole host of also support that was provided before that. Lance mentioned the COSME program, which is the program for competitiveness and for SMEs, basically small and medium-sized enterprises. And so that received also an additional boost from EaSI, which is the European Fund for Strategic Investments of 1 billion. in essence, it's important to know that also micro enterprises can also be covered in terms of the measures supported through SMEs, and also I know many institutions as well, microfinance institutions that have also benefited from the COSME guarantee. So you just have to keep in mind as well that it's not just because there is no money on one hand for EaSI, but there are also other programs that can be there to support. That's one thing to have in mind. And also when it comes to, I mean, in general, on that point, I think it's one of the key messages that we want to try to put across is that we do acknowledge and we do see that SMEs, including micro enterprises, are among those that are hardest hit by the COVID-19 pandemic, which is why, I mean, a whole host of measures that were provided in terms of giving immediate relief to SMEs through, for example, the increase of COSME, but also through other measures that were taken at the EU level, but also by the EIB group. So for us, it is important to continue. I mean, it is crucial to continue supporting SMEs, but also micro enterprises, because they are essential for national but also local economies. But at the end of the day, we also must not forget that, I mean, the EU with its unlimited budget cannot be everywhere. I mean, the first line of defense, let's say, in these times of crisis, are the measures taken at national level. What the EU then tries to do is really to come and support and complement those measures. So I mean, I think that's just one important message to also have in mind is that unfortunately we do have also a limited budget at the EU level, but we've really tried to put every euro to the best possible use, which is why together with Perek and his team and also the European Investment Fund in general, we've really looked at the different measures that we could do within the constraints that we were given. And unfortunately, one of those constraints is that unfortunately there was not enough money to go around, so we had to do what we could, and we did to the best possible use in terms of the measures that we could provide, which at the end of the day still allowed for additional risk area. Another thing to keep in mind as well is, I mean, we are entering into the final year of implementation, but also there was a top up, as Perek mentioned, of 300 million euros that came along at the time when before these measures were put in place as well. We still had budget left. Now it turns out, of course, that it's been such a huge demand that, as Perek mentioned, that basically we've almost completely exhausted it. But we have to also bear in mind that when we got this 100 million top up, which basically increased the budget of the guarantee from 100 million to 400 million, which is basically quadrupling it. I mean, that was enormous. So even a couple of months back, we weren't yet even sure whether the full budget would be exhausted before the end of the year. Basically, there was still money on the table at the time. And then last but not least, Lens, you mentioned also second recommendation, which I take note of, which is about the redemptions and also ability to buy back. I mean, we've also discussed this at length with Perek, and of course, I'm ready Perek to complement. But the idea is that there are certain rules in which we want also the support to be provided for microfinance. One of the key things is ensuring additionality as well. So and so basically, at the end of the day, we are dealing with taxpayers' money. So there are in certain cases we understand the arguments for and against sometimes, but there are certain cases where we've had to make certain decisions because at the end of the day, we want to really try to do is also support and help generate new financing. The buyback there are other considerations also taken into account. These are certainly some of the things that we've looked into very closely, and anyways, we'll continue also looking how we can continue improving and enhancing the flexibility of our instruments going forward, also for the next generation under InvestEU as of next year. So thank you.
Thanks, Shil. Is there anything else to add to that from, for instance, from Perek's side, or shall we move on to the other questions?
Maybe I can just say one thing on the last point that out of those recommendations that Lens provided before on the, which I understand is the refinancing or partial refinancing of microloans or redemption or buyback. I mean, it is, as Shirin said, it's clearly something that we have been analyzing quite in detail, and I do have quite some sympathy for it actually, and for it to be eligible. And I can also understand the underlying principles that would maybe not make it eligible in terms of mainly focusing on new financing. But I hope that we can continue, let's say, analyzing this thing, and maybe we can find some type of compromise solution going forward.
Thanks, Eric. That's helpful. Great. So we're reaching the last few minutes of this session. So I'd like to give a chance to the people in the audience who have not yet asked a question. As we mentioned before, there are two ways. Either you can raise your hand and then we can unmute you to ask your question verbally, or you can pose your question in the chat in the bottom right. Now, one of the questions was already addressed about by Shadeen now about the budget neutrality of the measures. And I'm looking now to see if there's any other questions in the Q&A, which from my perspective, there does not seem to be. Now, I'm also looking at the audience to see if there are any hands up. So if you would like to ask a question, please don't hesitate to raise your hand using the little icon. But currently we don't see any hands up, oh, we see one. Now we see Laura from ADI. Laura, would you like to take the floor? Maybe Elena, if you can unmute Laura.
Yes, I already did.
Perfect, thanks. Laura, can you hear us?
Yeah,
Please.
can hear you. Oscar,
Perfect.
I put question on the Q&A section.
Mm-hmm. Yeah.
Can you see them?
Yes, we can indeed. So the question was 90% of guarantee rate for new loans is good news, but the riskier loans will be those produced before April 2020. It could have been done with the budget neutral rule. So that's a question from Laura, an additional question.
Yeah, I was surprised that the rate in the guarantee rate was only offered for new loans produced after April 2020. And I guess the difficulties MFIs will have will be more important for existing loans already in the portfolio at the crisis time. So considering the budget neutral rule, could it be possible to raise the guarantee rate also for the existing loans in the portfolio?
Thanks, Laura. I don't know, would either Shadeen or Prerik like to respond to this?
I mean, I can maybe say one thing, but not necessarily giving the answer to this question. But I thought that in a way I know that there's an issue with existing portfolios, and there's obviously a lot of risk because now maybe going forward one can also control new origination and so on. But we for the existing intermediaries and for the existing portfolios, we did in a way also have the opportunity to increase the cap rate for the portfolio. I know that it's actually meant to be something that again mainly should benefit new origination, but it also benefits the existing portfolio. And then and I think also it's maybe linked even to this thing what we discussed before, but what do we want to support? Do we want to support the existing thing, or do we want to support the new thing? In a way, we already did support already in the past existing things, so now it was about creating incentives for new lending in this crisis environment.
Yeah,
I don't know if Shadeen has other answers to this.
No, absolutely, Perk. I mean, I fully subscribe to what you said. I mean, what we've done indeed for certain measures that had to be taken, because we had to also look at a certain point in time when these measures made sense. And I understand the question asked by Laura from ADI. In essence, at the end of the day, we had to also make a decision in terms of where we would try and focus. So in terms of the increase of the guarantee rate here in this case, for example, and as Perk mentioned, is for new loans. It was as of all the ones that were already, let's say, originated and included within the loan portfolios of the microfinance institutions as of the 1st of April, if not mistaken. And then that will be then valid until that period will run until basically 31st of March of next year, 2021. So in essence, let's not forget, I mean, these measures came into place in July. So there is a certain sort of retroactivity taken up until April, so a couple months before that. But I do also understand, though, I mean, you already have given loans in the meantime, but here really the focus was also because of the limited constraints that we have to really focus on the new lending, as Perk said.
Thank you, Shadeen. Thank you, Prerik, for that response. We have one more question from the chat from Gianpietro Pizzo. who asks who asks for more information about ESF Plus, such as, for instance, when can we know the guidelines and the room for advisory services like support to non-financial services support. Is there any more information that you give at this moment about the ESF Plus?
Yes, so perhaps I can compliment and hopefully answer the question. So maybe just for the benefit of everyone, so ESF Plus, which is a successor of the current European Social Fund, the ESF Plus in the future will have essentially two dimensions to it. One, which is shared management, which is basically managed by and decided by member states, and then you would have also a pot of money for the future EaSI program. Actually, will end up under ESF Plus. So on the other hand, the ESF Plus will be the ESF as we know today, which is basically shared management, and that's operational programs decided at national or regional levels. And then you have another part to it, which is the current EaSI, which will basically fall under ESF Plus. And then at the moment, as I said earlier, I mean, the negotiations are ongoing between the co-legislators, so the European Parliament and Council. So there are trilogues, basically, as we call them. So these are just discussions between the various European institutions on trying to agree on this program going forward. So at the moment, it's too early to tell in terms of guidelines. It may be interesting to know what kind of specific guidelines you have in mind, but basically, what we've done in terms of the proposal that was put forward by the Commission already back in May 2018, but also was revamped here in recently in May of this year, following COVID-19. Basically, we've kept very clearly a placeholder to continue supporting foreign microfinance under the future ESF Plus, so which will be the equivalent EaSI strand, let's say, the future employment social innovation strand of ESF Plus. So rest assured that there we have a clear proposal that was put forward in that sense. Now, of course, it depends on the outcomes of the negotiations that we'll have to see, and then once that is then decided by the co-legislators, then we'll be able to communicate on what specifically those guidelines will be. But I just wanted to say that, of course, and as my director said earlier, basically we want to continue building on the kind of support that we've provided up to now and looking into the future. So on the one hand, on the financial instruments under InvestEU, and on the other hand, the grants, the other instruments, including, for example, technical assistance advisory under the future ESF Plus.
Thank you, Shadeen. That's very helpful. So there's maybe I can piggyback off that question because that was about the future of the ESF Plus. But then maybe, as you mentioned, the negotiations that will determine the exact shape and content of InvestEU are also still not finalized, and that means that there are still quite a few milestones before we can see implementation of any kind of successor program to EaSI. But for let's say the financial guarantees instruments, whatever the name will be of that in the future. And given that the EaSI program, that the capacity will run out within the foreseeable future, there's a kind of there's a sort of a gap and some expectations from the sector that probably need to be managed. As you saw from Lens's presentation, there are some MFIs whose operation really depend on the availability of these instruments. So maybe my question is, like, when could we start to see the first steps towards the putting in place of a successor program to the EaSI guarantees?
Yeah, so thanks for the question, Oscar. I'm sure it's a question also that interests also a number of people in the audience. But so just to recap where we stand in terms of the legislative process going forward, also for the next multi-annual financial framework, in other words, the next EU budget for 2021-2027. So the Commission came forward with a proposal in May of this year, so on the 27th of May to be precise, which included, as I mentioned also earlier, this plan for the recovery. And so that Commission proposal was put forward. The Council then in July, so that there was the special European Council summit that took place on the 17th, 21st of July of this year, so over the summer, which reached basically an historic agreement on their side that took into account the Commission's proposal. And now, basically, in the autumn, we're now already in mid-October. I mean, the negotiations are ongoing between the co-legislators. So, as I said, the Council on the one hand and the European Parliament. And basically, I mean, we hope I mean, that's what we've called on the other institutions to reach an agreement as soon as possible in time for the implementation to start for the next EU budget as of 1st of January 2021. What does that mean? That means, sorry, as you rightly asked, Oscar, is that what happens now? Because indeed we have our instruments in the case, for example, the guarantee. Well, we have until the end of this year, and the implementation actually keeps on going. But we won't, since we've reached a point where we won't be able to have more budget. I mean, and won't be able to sign new agreements. Well, we hope that the new instruments will then be in place very soon, as soon as there's an overall agreement that's been reached on the budget. So what we are trying to do, and also we're looking at this closely with Perek and his team, and is basically to ensure a smooth transition. We want to avoid at all costs any disruption in terms of support provided to the sector. So we're very conscious of that. The fact of the matter is that it really depends on the outcome of the negotiations on the EU budget, which is decided at a political level, let's say. So once hopefully there's an agreement that's reached by the European Council and Parliament, then we'll be able to have all the tools in place and the budget basically unlocked to be able to continue supporting for the future. So at the moment, everything is a bit in limbo, let's say, but we're following this very closely. But we're very confident that that agreement will be reached before before the end of the year.
Thank you, Shadin. That's very helpful. Just before we round off, we have one small last question, which is sort of a technical question. So, what's the current status of Bosnia and Herzegovina in terms of EaSI?
Yes, so I can take that question. So under EaSI, I hadn't explained. So so for example, all the EU member states of the U27 are basically eligible. So if you're a microfinance institution based in those countries, you can benefit. In addition to that, we've also have third countries. So for example, Albania, Serbia, Republic of North Macedonia, and also Montenegro that are also eligible. In the case of Bosnia and Herzegovina, however, there was an agreement that was signed between the Commission and the country in this case to be able to allow them to be eligible under EaSI. So at the present stage, that's where we are. They're not considered as an eligible country. In the future, might that change? I don't know. To be fair, but basically because there wasn't, because in other words, for third countries outside the EU member states to be able to be eligible in certain programs, they need to basically sign an agreement. And basically also make a contribution to the program. And so in the case of Bosnia and Herzegovina, this was not the case. Sorry, Oscar, I believe you're on mute.
Thank you very much. Classic mistake. So we've already gone a bit over time. Thank you very much for your clear answer to the last question as well. So we started early, we're ending late. That means that there's too much content to unpack in 1 hour. That's, I guess, a good sign. But so we'll just round off here for today. What I'll do is I will share the last slide for the EaSI Technical Assistance contact details, the EaSI Technical Assistance program under which this session was organized. And so here you have the contact details in case you want to ask any questions about that. I also wanted to compliment Shadin for his excellent taste in banner background. I thought that was a nice touch. And so then also I'd like to re-thank again, of course, our partners and our sponsors for today, to the EIB Group as a partner, then the sponsors Galileo Network and BNP Paribas for their support again. We have another session coming up in between 15 and 20 minutes from now. It is on Atlas, which is a technological platform run by Microfinanza Rating, working towards enhanced transparency for the sector. So we very much recommend you to sign up, if you haven't signed up yet, to sign up at the last minute for that and join us again in that moment. And then all that is left for me to do now is thank the speakers very much for their great interventions. The session was recorded today, so you can find it afterwards along with the PowerPoint presentations on our website. Thank you everyone for coming today, and wish you a great rest of your Tuesday. Take care.
Thank you. Bye.
Thank you. Bye.
Thank you, Oscar. Thank you.
Bye. Thank you very much.